It seems like despite this trade truce, these numbers are still looking pretty soft. What's your take?
Yeah, I think we got to look at the bigger picture, right? So if you look back to the past couple of months, we saw the macro policy improvement in September last year, and that has actually, together with some front loading of activity in the first quarter, caused some pretty solid data in the fourth quarter of last year and the first quarter of this year. So we have always been of the view that with the trade tariff issue with the U.S. and increasing uncertainty on the external side, we will have growth moderating into the second quarter. The trade truce in Geneva and the London talk was helpful to de-escalate the tariff conflicts. But anyway, the underlying momentum has been on a moderating trend. So our baseline has indeed been looking for the sequential growth of the Chinese economy to slow from about 6.6% on a quarter-on-quarter annualized basis in the first quarter to about 3.5% in the second quarter, and then further slow to 3% in the third quarter. And I think that the PMI numbers are actually pretty much in line with what we are looking for in terms of the economy's moderating momentum.
What would be the key factor then to shift that in the other direction? Is it inflation picking up? Is it consumption picking up? What's most concerning to you right now, given it seems like the worst of the property sector slump could be, if not behind us, at least it seems to be happening around now?
Yeah, indeed. I think there are diverging trends in the different parts of the economy that we have seen, especially over the past 2-3 months. In that the external sector, you have the tariff drag, especially China's exports to the U.S. was down 40% in April and May. And then on the domestic front, you do see pretty mixed performance in that the areas getting policy support, the trade-in subsidy, the equipment upgrade support, those sectors were actually doing pretty well. But then you do have the ongoing drag coming from the housing sector, which is yet to bottom out. And then consumer sentiments outside of the policy support areas were still along kind of historical lows. So in that sense, I think in terms of where policy focus is going forward, for this year in particular, domestic support, consumption support is indeed very important in that regard. And our view has been that what we have seen in recent months in terms of the subsidy for consumer durables, autos, and so on, they are good and they have shown some impact. But the effect will fade out going into fourth quarter, end of the year. So what you need to see is further step up on policy support, and particularly on services consumption.